Son pretty much put it like this. He said, today's earnings are a mess.
Yes, he did say them.
And we should point out that's 6.5. That was SoftBank.
Yes.
The Vision Fund, it was like a billion or two more, right?
WeWork alone was more than a $4 billion hit, right? And that is both the parent company and the Vision Fund. So he did say it was a mess, but remember, he fiercely defended his vision. He did say they were moving forward. He said the strategy was the same for the most part. Remember, they are making some changes at the edges, including how they view corporate governance, but they're defending what they're doing here.
Interesting.
Ben, I want to bring you in here. What does it mean, or what are the consequences downstream to earlier stage funds, smaller companies, and so forth, if perhaps the sort of mega funding that we see, like at the unicorn level, is going to fade, or maybe even if there's like a slight strategy shift going on?
Well, I think we're seeing some immediate positive impact. I think that the WeWork explicit example was something that really shone a light on the issue of having superstar founders that commanded inappropriate governance structures. And I think that has made all of us pay more attention to how careful we are with that exact reality. I mean, superstar entrepreneurs are often able to dictate their own terms, but I think you're seeing a bit more caution there. I think early stage companies will be pretty much shielded from impact. You've got SoftBank pretty much fully committed at about 85% of their existing first fund. They're not going to deploy more. They'll keep that on reserve. So what you won't see is the near-term fluctuations of SoftBank coming in and sort of having an opportunity in one business that might affect others. Having said that, while SoftBank is emblematic of all of the new money that's come into this market, there's just a tremendous amount of capital that's flooded into Silicon Valley over the last 5 years, and I don't see that changing anytime soon. And that money will be available for great startups.
Sonali, it's worth remembering, and he was fiercely defiant, as you very clearly laid out. Yes, he's had some big losses, but he actually crowed about the amount that he makes versus your average venture capitalist. He's saying, look, I'm making double. And there are still some wins. We're just hearing how ByteDance is taking a chunk out of Baidu's advertising revenue, and he's in ByteDance. He's in also Didi, the two biggest startups out there at the moment.
That's a great point, but remember, Didi also has profitability issues in its own right, and so I think the future here is really in question. Remember, Uber is still losing money after the quarter had ended, so they do have more pain ahead, not to mention they're burning through cash themselves. SoftBank is. Something I want to know from Ben as well is, you mentioned the corporate governance issues. That's actually something Jamie Dimon himself has also brought up, but at what point do we see people scrapping these dual class structures here? Is this behavior over, or are some of these corporate governance issues continuing to become a problem for a little longer?
Well, you've got to keep it in balance. If you look at the top 10 companies in the world, they are basically founder-led, at least in their origin stories, founder CEOs. Microsoft, Apple, Google, Facebook, these companies were built on the back of incredibly focused founders that often had levels of control that allowed them to do what they believed to be the right thing, and in many cases end up being exactly that. Facebook famously was offered $1 billion for the business, and the story I heard was the board was supportive and Zuck said, no, we're not going to do that. And obviously it's gotten a lot further than that. So I don't think you'll see this go away. The challenge is creating that balance. What's happened is every entrepreneur thinks they should get Zuck treatment, and every entrepreneur does not deserve to get Zuck treatment. On the edge, with the truly exceptional superstars that have proven themselves, I think they will be able to command those terms. But I think beyond that, it's going to be really hard. I mean, you can't go back to your firm and tell them that you're going to be a passive investor if you're a true venture capitalist. If you're a private equity style investor, which I think is a bit more of what SoftBank fits into, you have a little bit more flexibility. But VCs sit on boards from the early days. It's a 7 to 10 year journey. You've got to be comfortable with the governance structure that's there.
So, Ben, I mean, I want to get to the personality of Masayoshi Son. I mean, he's not the kind of guy who's just going to sort of pick a leader for a company who is, I guess, not dynamic, I guess, as to put it diplomatically. He tends to go for the folks who really are sort of these wide-eyed thinkers, these wide-eyed people who can sort of carry out this vision and take his money and make something out of it. If he stumbles on a few investments, he seems to be okay with that. I guess my question is, can Son sort of transition to a different phase in his career where he's willing to take chances on people who are a little bit less dynamic?
Well, I made a mistake in my life early on. I was a seed investor for about 10 years, and it took about 3 years before any of my companies failed. And that worried me a lot because I thought, I'm investing in PowerPoint slides. These people haven't even started their business yet. I should see a higher failure rate. So I decided to loosen up. And what I loosened up on was people. And that was a huge mistake. You cannot lower your bar for people. You know, I look at it as you need great people, great ideas, and huge markets if it works. I'd be very surprised if he changed his view in terms of the quality of people he needs to back. The challenge is, how do you see through? I mean, bottom line is, when your founder tips over from visionary leader to self-proclaimed messiah, things can get very messy. Messy messiahs, I guess, would be the way you'd look at it. But they're the best entrepreneurs, while sometimes challenging because of the ego involved, have the right vision, have the right strength of character. You've got to be a phenomenal storyteller. You know, I've learned this over and over and over again. You could have a great business, but if you can't tell that story, you can't recruit, you can't raise money, you can't get customers. So I don't see why he or anybody would ever or should ever change their view of focusing on just absolutely phenomenal human beings. You just got to be really careful you don't end up accidentally investing in sociopaths.